Hello everyone, Trader here. Today, we will start analyzing fund dollars. I use the MFI indicator, and we will test it, how it works, what signals it shows in motion. First, on the first yuan, I always work in 15 minutes there in the time frame. I set the MFI indicator to 14. Level 605040. At the beginning of trading, the mind starts from 9 o'clock. 9 o'clock. And according to, well, approximately 19. 19, let's set it to 19. This is our interval on which we trade. What should we see first here? I wanted to see what levels there were. What ripple effects were occurring. There were movements here. There was movement here. So, I don't see everything in the nearest ones. So, from these we will also look what will be the reaction to these prices. The first rule, as soon as you enter zone 60, into the overbought zone, we are looking for entry points to sell. So, it basically started right away, like it starts at 9:15. Let's go to M1, and go to M1, and what we see. So, we see that we could try to enter here in this zone. Let's mix the two. Approximately would include this. One here on this one here candles. Approximately. Coming that you would accept here it would be. And that would be our best deal. And the deal went down. Here I am hooked at 17 to 18%. Almost 18%. So, the rule is introduction. This means we place our feet behind the screw of our feet. Here, of course, if the question was that where we would go out here, we should have held out on this. I'm looking at the M5 first. What does the M5 show us? I would show the closure here. Well, somewhere around here approximately. We would close 1 to trend. Naturally, we probably wouldn't have gone any further, because it has entered the oversold zone here. We would go shopping. You could, in principle, look at the trend. If it starts to stall here, then maybe it wouldn't be worth going out here. Here everything needs to be looked at in its place. Who trades how? So, we'll put. From now on we would have to buy. We would buy and switch to M1. From now on we would buy it so. Of course, this is the bottom part you bought from. This is the part you bought from. This means that we would have purchased. This is where the purchase was made, approximately here. We would have closed. Well, maybe we wouldn't close here, because here the discovery took place, and then it arrived and returned. In winter we would get feet. There's a lot of options here that we would log in again. Now let's see for a second that he touched a demonstration boat here. From this to this I came back again, then we were supposed to trade on sale here. From this candle here, from this to this I came back again, then we were supposed to trade on sale here. From this candle here, from here, that is, here in this one here, let's move on. Oh, wait, excuse me, this is an M15. No, we wouldn't trade so. We would have entered a little lower, right? The point of entry would be somewhere here. And look, it basically goes up to 1 in 5. Let's go to M5 so we can get here. Well, somewhere around 1 to 2. Plus 2. And the price, of course, is deeply down along the M15. Of course, we don't see it here. So, she tried here and there. Again, she went down, fight my way up, couldn't gain a foothold, and, accordingly, we would be here. We wouldn't make any decisions here. We need her to touch. And again we went up. We need it to touch. This one is 50 and has returned again. Then we would trade down. And here we don't make any decisions. And today, as it turns out, we had it. 1 minus plus minus plus. And that's 2 minuses and 5 pluses. And where is the calibration result? Is plus 3. Plus 3%. This is today, January 29th. If anyone is interested in this strategy and wants to understand it, write in the comments. I will answer questions. We'll figure out. I will record a video by everyone.